Assalamualaikum warahmatullahi wabarakatuh. My name is Aiman bin Muhammad. I'm from BA2495A, and today I will present about the impact of COVID-19 towards the overnight policy rate. The overnight policy rate, or OPR, is a crucial tool used by central banks to manage the economy and carry out monetary policy. By adjusting the OPR, central banks can regulate the money supply, interest rate, and credit availability to achieve economic goals like price stability and growth. Lowering the OPR stimulates economic activity by reducing borrowing costs, encouraging spending, investment, and job creation. Conversely, raising the OPR can curb inflation and excessive credit growth by making borrowing more expensive. The OPR also influences the stability of the official system by controlling liquidity and preventing asset bubbles. Change in the OPR affect various interest rates, including loans, deposit, interbank lending rates, and short-term rates. During the COVID-19 pandemic, Bank Negara Malaysia (BNM) lowered the OPR to 2.5% to mitigate the economic effect. This led to lower borrowing rates, increased consumer spending, and supported the overall economy. Overall, the OPR plays a significant role in shaping borrowing and lending habits, affecting employment, economic growth, inflation, and the overall health of a nation's banking and economic system. The impact of COVID-19 towards OPR. There are three. The first one is loan interest rate become low. The implementation of lower OPR, which is interest rate, was a response to the economic disruption caused by the COVID-19 pandemic. The central bank in Malaysia sought to boost economic activity by reducing borrowing costs for commercial banks. This move encouraged borrowing and spending, supporting sectors severely affected by the pandemic. However, there were concerns about the overhang in the residential real estate market. The reduction in OPR also prompted investors to seek higher yield in other assets, aiding financial market recovery. Despite the lower OPR, inflation remained relatively low during the pandemic. Central bank continuously monitored the situation to ensure financial stability and sustainable economic growth. Next is lower returns for saving accounts and fixed deposit. During the COVID-19 pandemic, global central bank, including BNM in Malaysia, implemented expansionary monetary policies to boost the economy. They reduced benchmark interest rate like the OPR to encourage borrowing and spending, and as a result, saving account and fixed deposit interest rate declined, impacting savers and retirees who depended on this low-risk investment. Some individuals turn to riskier assets for higher return. While this promotes economic activity, it raises concerns about financial market stability. The central bank aims to balance growth and stability, but cautioned individuals to adjust their investment plan accordingly. Lastly, lower profit margins for banks. The COVID-19 pandemic had a significant impact on banks' income and profitability. When the central bank lowered interest rate, bank interest income decreased due to lower loan rates for borrowers and reduced return on deposit. The pandemic also led to increased credit risk as businesses and individuals face financial difficulty, resulting in more defaulted loans and non-performing assets. Bank fee incomes was affected by reduced consumer spending and decreased credit demand, further impacted lending activities. Government stimulus and assistance program also influenced banks' income sources. Additionally, stricter regulatory inspection and stress tests increased compliance costs. Overall, banks experienced decreased profit margins during the pandemic and will need to adjust their strategies to adapt to changing market conditions for a potential recovery in the future. Conclusion. The COVID-19 pandemic had a significant impact on the economy, leading to the central bank implementing expansionary monetary policies, including lowering the overnight policy rate. This resulted in cheaper borrowing for businesses and consumers due to the reduced loan interest rate, stimulating economic recovery. However, it also led to lower returns for savers as interest rate on saving account and fixed deposit decreased. Banks face challenge with reduced interest income, increased credit risk, and higher regulatory costs, leading to lower profit margin. The central bank aimed to strike a balance between supporting economic recovery and maintaining financial stability during the prolonged low interest rate environment. Overall, the OPR impact on loan interest rate, saving account, fixed deposit, and profit margin for banks was part of the broader measure taken to address the economic challenge caused by the COVID-19 pandemic. As the situation evolved, continuous assessment and policy adjustment were made to promote sustainable growth and stability in the financial system. I think that's all from me. Thank you.
I'm an icon, man. And my girl about a 10. I should fuck her in the bed.